Hello everyone, my name is Alison Woodall and I'm a relocation specialist. That means I'm here to help you with the financial, logistical and emotional issues that make relocating so stressful. And today I am talking to Marcelo Llerena, and he is a mortgage loan officer based near Orlando. Marcelo, welcome. Thank you for talking to me this morning.
Thank you for having me. Appreciate it.
Well, I know the first question that anyone moving from California wants to know is, how do you deal with the humidity near Orlando?
It does take a little bit of getting used to during the summer months, but after the summer's over, the weather is absolutely beautiful for the 8 months of the year. So
Well, I
you
live
can
near
get through the
Tampa,
rough part.
sorry. Yeah, I live near Tampa, so you do get used to the humidity, and the benefits of the weather in Florida more than outweigh that. So could you tell everybody a little bit about what you actually do, what your job involves?
Well, as a mortgage loan officer, I try to get people the best rate in terms in as far as a home loan goes. And being that I work for a brokerage, we actually have relationships with 8 to 10 different banks. So my job is to look at all the banks out there, all the loans that are available, and try to get the person the best rate in terms based on their conditions.
Okay. And you said it's very important that someone comes to you before they actually talk to a realtor. Why is that?
A lot of times, a realtor will look for you to get pre-approved before they even go out and take you looking for houses, because they want to know that they're dealing with a serious person, and that they've done their homework and have gotten a pre-approval letter so that they know that the person is a good candidate to purchase a home and knows what their price range is and knows what their monthly payment is going to be, and all that information is important to have beforehand.
Okay. And what would happen if someone has a not so good credit score? Can you still get them pre-approved for a loan?
Yes, we actually have, like I said, about 8 to 10 different banks. We have a number of banks that will do, the higher end credit, but we also have a couple of banks that will do the lower end credit, and we can go down to 580 and even a little bit below that. So we can help the full spectrum of people.
Okay. And when we talked before, you also mentioned it's a good idea for someone to check their credit score. Is that just to make sure there's nothing outstanding that maybe they need to try and get taken off their credit score or the credit report?
Yes, that's important, because when you're trying to obtain a loan, you don't want to have any surprises or setbacks. And if you don't know what's on your credit score, something may have popped up that doesn't even belong to you. And now you're going to have to take a few days to a few weeks to try to get that taken off so that you can obtain the home loan.
Okay, that's good to know, because I wouldn't have thought of that. And then you also said, as well as credit score, you would take into account someone's debt to income ratio. Can you tell me a little bit more about what that is and why it's important?
Well, we look at the full financial picture. We get to see how much a person is making, their income, and then how much they're paying, their liabilities. And we take into account how much they're paying for their house. And we come up with a debt to income ratio. And a bank normally wants it about 35 to 45%, not much more than that, so that they know that the consumer, the home loan, is going to be a good risk for the bank.
Okay. All right. So there's a lot to think about before you even start talking to a realtor. So you need to make sure your credit's as good as it can be, pay off as much debt so that income to debt ratio is, as low as possible. You mentioned that the best way probably to secure a loan would be if you were retired, because you have a guaranteed income, or if maybe you are staying with the same company but transferring to a different state, working either remotely or working in a different branch in a different state, but for the same company. How does that allow you to get a loan more easily? Is it because you have a guaranteed income?
Well, retired people don't have to work anymore. So as long as they have a pension or a 401k, that money is going to be used to pay the home loan. So that makes it a little bit safer for the lender that's actually giving the home loan. And then what a bank is also looking for is stability. So if somebody is coming from one state to another state and they're changing jobs or changing careers, uh, a lender likes for you to be in that same field for about 2 years before they will really like to loan you any money. So if you're already retired, then you have that source of income. If you can stay in the same field, same job, and maybe work remotely from Florida after you've moved from California, then we just need a letter explaining that you're still going to keep the same job and your employment's going to be the same, the income's going to be the same, and we can do a loan that way as well.
Well, that's good to know. Yeah, but what would happen if someone is moving for a fresh start in a new state, and maybe they maybe are starting a new job, or they're moving to that state and hoping to find employment when they get there? What are their options?
Well, depending on their individual situation, if they have the income and they can carry two loans at the same time, we can do a loan that way. Or if they do not have a employment here in Florida yet, hopefully they have enough money from the sale of their house in California to come out here and purchase a house cash. Or another way we could do a loan is if they're not employed at the time, we can do something from that current assets that they have, bank statements, that route as well.
Okay, and you also mentioned if someone's in escrow or in contingency, if they can't actually carry two mortgages, if they have sold their current house or they're in contingency, they could get approval for a loan based on that. Is that correct?
Yeah, as long as their house that in California that they're currently selling will be sold by the time they move to Florida, then that loan basically cancels out and they'll just have the one loan for the new house in Florida.
Okay, perfect. And we were talking during this interview about California and Florida because those are the two states that you work with. But this would be the same for any state that you move to. You just have to find a different mortgage loan officer to secure a loan in Tennessee or in Texas. But the rules are still still the same if you're needing to find a loan. The other thing is that the real estate market is really hot right now. So if someone can sell a house in California and buy a house in another state, ideally Florida, for less money, if you can make a cash offer, why would a cash offer beat out like a loan offer?
Cash is a lot simpler to do because they can actually close on the new loan. On the new home in about 2 weeks. As opposed to getting a loan, you're probably looking at closer to a month, 30 days to complete that whole process. So cash is going to be a lot cleaner, a lot easier to do. And it just comes down to time.
Okay, wonderful. And then, so we've talked about people who are moving, who have a house to sell and moving with a job. What happens if you are, say, just renting a house now, or you don't have a job in a new state? What would you recommend for someone who literally has no asset, no house assets, who's moving to a new state? Would you recommend just a short-term rental so that they can build their employment history and start saving maybe?
Yes, I would advise them to come out, maybe get a rental in the area that they're looking at. Get to know the city, get to know the area, start looking for houses in the areas that you do like, and get a job while you're out here. And it will make it easier for a loan officer to get you a loan when it comes time for that person to actually purchase the house.
Perfect.
And if they can't get a short-term rental, I know of a lot of people who are buying motorhomes and RVs. They can take that route as well too until they decide.
And I've actually lived in my travel trailer for 18 months in Florida. And if you're moving to Florida, it's set up, the whole of Florida is set up for snowbirds who come just for the winter. So the resorts that you can stay in are just amazing. And I'm sure it's other states are set up for that as well, but maybe not as seamlessly as Florida. It was an amazing experience for us. And so for those kind of people who maybe are living in temporary accommodation, or maybe their RV, saving a deposit, how much of a deposit would you need to save to put down on a first-time house?
Oh, we do a variety of loans. A conventional loan starts out at 5% down payment. FHA loan is 3.5%. If you're a veteran and you can do a VA loan, that's actually 0%. But we still have closing costs on top of that. So depending on the individual again, we can go 0%, 3.5%, 5%. Or if you are selling a house in California and you have big chunk of change, you can put down 20, 30, 40% down.
Okay, excellent. And so a lot of people moving from California feel that they're never going to be able to afford a house just based on the fact that California house prices are so high. What is kind of like the average loan that you secure in Florida? Is it, 800,000, 900,000, or is it much more reasonable?
Oh no, the housing market here is a lot different than California. You get a lot more bang for your buck. So here, I would say our average loan is about 250,000, and your typical house in California compared to Florida is probably going to be about half the price.
Wow, that should give everybody who's slightly nervous about leaving California a lot more hope, and maybe just that little push to leave the state and move somewhere new. And I know you're an expert on Florida, but based on my experience, there are very affordable properties in many, many other states once you leave California. So obviously, if someone is moving from California to Florida, they can contact you for all their loan information and approvals. And wherever this video is posted, we will put Marcelo's contact information in the comments. What happens if someone's moving to another state? Is just a Google search a good way to find someone who does what you do?
Well, I'm a mortgage broker, so if you want to work with a broker, you can go to findamortgagebroker.com. That's a good resource. You can also Google just a mortgage broker, mortgage loan officer, or if you're working with a real estate agent, that person will most likely have a few lenders that they work with, and they can refer you as well.
Okay, that's wonderful. That's all really good advice. Anything else you want to add? Well, I think we've covered most things.
Well, I moved out to Florida about 9 months ago. I'm loving it here. Everything's much cheaper, slower pace of life. I'm happy to do it, and I tell everybody on the Facebook groups that if you're thinking about doing it, by all means, do it.
Yeah, and I would agree. I'm the crazy person who moved from Florida to California, but I just think anytime you're brave and you step out and you make that move, everything works out for the best. So thank you for the words of encouragement, and thank you so much for all the information and the guidance that you've given everybody today. I really appreciate it.
Well, thank you for having me. I appreciate it.
Bye-bye.
Bye-bye.